In this video, I'll provide you with 3 tips to show you how you could potentially obtain a larger mortgage as a first-time buyer. Let's go. Hi, my name is Alex Kerr. I'm a qualified mortgage broker and my passion is simplifying the mortgage process for first-time buyers. Let's get into the vid. You may or may not have an idea how much you can borrow from a mortgage lender as a first-time buyer. I've come across situations where the loan amount offered by the mortgage lender is a little bit short of where we need to be. I've got 3 tips for you that could help you bridge that gap and obtain a larger mortgage. I'm not referring to a mortgage lender that will lend you more with higher income multiples if you have to earn a certain income or have a certain job. I'm just talking about enabling you to borrow more with various mortgage lenders. Tip number 1. There are quite a few mortgage lenders that will lend you more as standard if you choose a fixed rate mortgage of 5 years or more compared to choosing a fixed rate or a product of 2 or 3 years. Sometimes the difference in the borrowing amount can be quite considerable. So if you have opted for a 2 or 3 year fixed rate and this doesn't quite stretch to the amount you want to borrow, then asking the mortgage lender to consider a fixed rate mortgage for 5 years or more could mean the lender is willing to lend you more. This is not with every single mortgage lender in the market. However, there is enough mortgage lenders that operate this way that it's worth asking the question if you need to borrow a bit more. If the mortgage lender doesn't operate in this way, then maybe look for one who does. So why is this? A mortgage lender will be willing to lend you more as 5 years or more having a mortgage payment where the payment or rate will not change no matter what's going on with the market provides a more stable option, and that mortgage lender knows for that period, based on your set of circumstances, you are able to afford the mortgage. They also receive your money for a longer period of time, so I'm sure that comes into the equation as well. However, it's not always the best option to borrow the maximum you can, as this will mean you are more of a risk to the mortgage lender, so that is well worth bearing in mind. Also, 5 years or more as a fixed rate may not work for your situation. Maybe you're getting a lump sum of money within the near future that you want to repay from your mortgage, or maybe you plan on buying a property that's a bit run down, doing the property up, and hopefully selling it on for a profit just after you've moved in and then moving to your next property. Fixed rate mortgages normally come with exit penalties. So if you have short-term plans, a 5 year or more fixed rate might not be right for you. However, whenever you speak to a mortgage advisor or your bank, it is the responsibility of the mortgage lender's advisor to assess your situation and then make a recommendation of the mortgage product to you that best suits your circumstances and plans. Tip number 2, increase the mortgage term. I've had agreement in principles declined from mortgage lenders in mortgages that have a term of 25 years because it's just outside of the affordability for that particular first-time buyer. However, once I have amended the mortgage term from 25 years to 35 years, this therefore reduces the mortgage payment each month and can sometimes make the difference in affordable versus not affordable, and therefore the agreement in principle has been accepted. Again, not every single mortgage lender works this way. They'll have slightly different credit scoring and affordability criteria. However, it is sometimes worth trying if your case isn't fitting with the mortgage lender. Something to watch out. By extending the mortgage term, you are increasing the amount of time you are paying the debt over and therefore paying more in interest, as at the start of the mortgage, more of your monthly payment goes onto the interest element and less onto the capital. Therefore, extending the mortgage term will take longer to pay off the capital and you will end up paying more in interest. The main goal should be to try and repay your mortgage as quickly as possible within affordability. So just take that into account as it's not always the best option for your needs. Tip number 3. So tip number 3 is a little bit more obvious, but there is a way you can use it to your advantage. So reducing the amount of debt is going to mean you can borrow more. Mortgage lenders will take 3% of your credit card balance, times that figure by 12, and then deduct that from your income. If you have any loan payments, then they will take that monthly payment, times it by 12, and deduct that from your income. Now, here is a little trick you can use to your advantage. Let's say you have £1,000 on a credit card. You can't pay off today, but you know it will be paid off before you move into the property. You can therefore clarify to the mortgage lender that you have a £1,000 credit card, but the balance on completion will be zero. This will be a question during the mortgage application. This therefore is telling the mortgage lender that you have £1,000 on a credit card. They will be able to see that when they do the credit score, but you would have paid it before your mortgage completes. The mortgage lender will therefore make it a condition of your mortgage offer to repay your credit card before they release the money, which is just before you complete. Your solicitor will see this in the mortgage offer and will ask you for evidence that your credit card has been paid off. The advantage this gives you is if you have just purchased the property, the average transaction time is normally anywhere between 2 to 4 months from start to finish. So you know you have at least a couple of months or so to get that £1,000 together to repay the credit card, and this can therefore mean you can borrow the amount you need to and you won't have your borrowing reduced because of the credit card balance today. If you would like to know how much you can borrow, what mortgage lenders have the best deals and how to achieve mortgage success first time when applying direct to a mortgage lender, we now offer an online course where we provide you with a mentorship throughout the process. It provides you with lifetime access and content is updated weekly. It's called First Time Buyer Expert. To find out more, just go to firsttimebuyerexpert.co.uk or click the link in the corner of the screen or the description below. Today's question: are you aware of any of these techniques? Let me know in the comments. Please note, we do need to let you know that your home may be repossessed if you do not keep up with repayments on your mortgage. So thanks for watching today's video. I hope it's provided you with some useful tips. Please check out the show notes for a recap with access to any links discussed today. Please consider subscribing and ringing the bell to receive notifications on our latest videos. I've been Alex Kerr, providing the best tools and tips to first-time buyers. I'll see you in the next one.